Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Alyssa Etheridge, Managing Director with Aon's Transaction Solutions team to discuss global M&A trends. Alyssa, it's great to meet with you. Welcome to Trade Talks.
Hi, Jill. It's great to be here and to Trade Talks. Thank you for having me this morning.
And thank you for joining us. And let's review M&A deal flow over the course of 2020.
Yeah, so from our perspective, Aon's perspective, and I would think the whole M&A community, it really was a tale of two halves for us. And we do have a graph to demonstrate our particular bound deal flow. But as you'll see, Q1 started off very strongly for us and was increasing into February, which was off the back of a very, very strong 2019, where we had a record number of deals placed with transactional liability insurances, which of course echoed the M&A landscape generally. What followed, of course, with the uncertainty of the onset of the pandemic, ongoing opening and closing of businesses, and of course the human toll from the pandemic, was that M&A deals, effectively fell off a cliff, and our bound deals mirrored that too. I think the deals that we did do during this period were largely ones that had been in the works prior to the pandemic. Following the sort of slow 3 or so months that we experienced, as the start of Q3 progressed, we really did see some encouraging signs of life. I think deal makers were working out ways to conduct deals remotely and have the meetings that they would have had in person with management over Zoom or other virtual platforms. And we saw strategic companies and private equity looking to make strategic add-ons to some platform deals. So as deal volume picked up, while it was picking up, it didn't necessarily prepare us for the absolute spike that occurred in Q4. The final quarter of 2020 saw the highest quarterly global M&A volume for 5 years. And from our perspective, our combined deals were up 68% to the beginning of the year. Aon closed out the year with some 1,030 deals globally, representing only a modest decline from 2019. So that strong finish in Q4 really, we are finding, is now resonating into 2021 as well.
And Alyssa, would you say the strength that you saw in North America mirrored your global M&A teams?
Yes, absolutely. So that was certainly a global trend for us. We have operating hubs that cover M&A deals worldwide across the UK, EMEA, and Asia Pac. And we certainly saw a similar pattern of deal flow and bound deals for us throughout the globe. I think what was interesting was globally we also saw some key trends from an industry perspective. IT, technology, data and analytics software, for us as a firm represented 12% of overall deal volume. And that's probably not surprising given COVID's push towards remote working and automation for companies delivering digital services. Second to that was professional services and financial and tech services. Interestingly, though, Asia saw a stronger representation in the manufacturing sector. And while we're still distilling down the data, that perhaps is due to the earlier lockdown period that they had and a bigger period towards the end of the year for those types of industries to recover. But otherwise, certainly our trends here in the US mirrored our trends globally.
And the soon-to-be released edition of Risk in Review series of the surveyed senior executives from corporate development, private equity firms, and investment banks, how do they see the landscape shaping up for 2021?
Yes, no, the study that we're about to release is really interesting. All respondents predicted an increase in M&A insurance as a key risk tool on deals. 88% believed that the use of rep and warranty insurance, for instance, would increase, and 40% expected it to increase significantly. So it's clear that the respondents and deal makers are looking at risk generally on deals. From a more macro deal approach, though, over 50% of the respondents indicated that expectation for 2021 is for deal volume to continue to increase. This is probably a positive outlook due to vaccinations, but also the significant and other economic factors leading to a recovery within industries, but also probably the significant dry powder that remains into 2021 for private equity firms. And as both strategics and PE firms look to take opportunity in the distressed market also that we are finding. From a geographic standpoint, respondents indicated that perhaps Asia Pacific was the region that they'd be looking to predominantly for foreign investment, given their current openness to foreign investors and cross-border trading, and some of the antitrust rulings in Europe that have increased complications, for instance, for deal makers. And finally, from a macro standpoint, the same industries that experienced uptick in 2020 are expected to be the big deal industries for 2021 as well: technology, consumer, pharma, and biotech.
And Alyssa, to wrap up here, any trends in alternative investments to share?
Yes, absolutely. And I think this is, for us, certainly one of the most interesting outcomes from our survey and the risk and review study that we're releasing. So the positive outlook being said, there is still risk aversion by buyers and sellers, and we expect this to remain high into 2021. There is still an uncertain landscape, and deals are still being done remotely, for example. So the study interestingly highlighted certain M&A strategies that align with our own experience and solutions that we're looking to provide for clients across the M&A sector. For example, one of the key tactics respondents mentioned that they would potentially look to would be pursuing more minority deals or joint venture deals. 52% of respondents indicated that as one of their top 2 likely strategies. From our end, this is particularly interesting and something that we can help both buyers and sellers solve for. As for example, the use of insurance can be very helpful if sellers or founders are staying on in the business, whereby a minority interest or a joint venture interest is being taken. Similarly, distressed and carve-out transactions, that is expected to be a very strong landscape for M&A deal making. We have a very strong focus on that internally here at Aon from a broader M&A perspective, but also from a transactional solutions perspective in terms of making sure we can wrap insurance around financial statements, for example, which are incredibly important on those deals. And 2 other points I think which were really interesting, which align very nicely with our key strategies and what we've recognised in the market too, are around the use of SPACs. Of course, there's been a huge trend for that in the last 18 months or so with the easing of the regulatory environment there. And it's meant that it's a very popular mechanism for consummating merger transactions. And we've stepped in to facilitate with numerous clients now over the last 12 to 18 months, being able to wrap insurance around those deals to provide adequate protection for buyers in this landscape. And similarly, secondary transactions. That's something that with the use, with the growing need to use capital and use capital investments, we're expecting that to continue and for our work there to continue as well. Finally, one other point that I'd like to raise that was clear during our study, in terms of risk, tax risk was second on the list for what people saw as one of the more potentially riskier aspects at M&A targets. So perhaps that's as a result of potential tax legislation or tax rates changes. But from an Aon perspective, the use of specialty insurances around tax insurance and then other insurances such as litigation insurance and ring fencing those risks at target level is something that we see from our perspective will be only a growing trend in the course of 2021. So I think people are looking to maintain and grow M&A opportunity will continue, but people are thinking smart about how they do it in the current global environment.
All right, Alyssa, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you, Jill.